That being said, Greg, I know you've been going back and forth to Charlotte to determine whether or not there's opportunity to buy single-family rentals. A couple weeks ago, and I can't remember when we started this, I think it was about a couple weeks ago, you mentioned that there was a little town, a little city called Gastonia, where there was some lift, and you were looking at property, I think the last week, and you stumbled upon a couple of opportunities. You stumbled upon a couple of properties you checked out. What's the latest update there?
Sure. So just to bring everybody up to speed, there's this trajectory west of Charlotte, Charlotte being a great southern market that's getting a lot of inbound migration. So the real estate market's very strong, and my mission is to find the pockets within a market like that where there's extra lift. And that's the term that we use to talk about things that are going to push pressure upward on both values and rents based upon nothing more complicated than population growth, right? Mm-hmm. So west of the city, Gastonia is this town about 20 miles west that is underpriced as compared to other towns that are 20 miles away from downtown Charlotte. So that caught my attention. I wanted to go out there and check it out. Halfway on the way to that town is a place called Belmont, North Carolina, where they're contemplating a light rail commuter train station, which is a big winning opportunity. You look at what happens in markets when you can get to the downtown in 20 minutes by light rail. It just, the real estate pops in that market. So I'm concentrating on that. And then even closer in, you've got a massive Amazon distribution center that's adding 2,500 jobs in the $30,000 to $50,000 a year income range generally, which means renters, many of them. And there's a neighborhood tucked right in there near the airport, near uptown Charlotte. And so I was looking to buy property in each of these three places. And right away, I hit upon an owner who was selling 2 rental properties that were occupied. And I got him into contract, and I'm backing out of the contracts. And I wanted to share with everybody why, because this is the advice that I've given a lot of callers who have talked about some of the sort of the knee-jerk reaction a lot of people have when they talk about investing in real estate is they assume you're talking about flipping. They assume they've watched it on TV, they've seen the seminars, it's all about, finding some dilapidated house, fixing it up and flipping it, and nothing about that is what we talk about here. We talk about accumulating quality, right? So to me, the market that has upside is what's exciting, and I wanted to buy a house in that market, and I ended up in contract with 2 houses that, because they were occupied by tenants, I couldn't see them until I was technically in contract. And then I had 10 days to get in there with an inspector, and what I saw I didn't like because they were beat up. The seller told me that they were in good condition, freshly painted, no deferred maintenance, and what I found is that they were none of those things. He ended up telling me, and he was a nice guy, he just exaggerated the condition, and he didn't realize that if you're going to sell a house and you want to exaggerate how good the condition it is, but anybody who wants to see it can schedule a showing, well, you're going to get bit on that when they go see the property, but they're not going to be already in contract. I had this property tied up for a week and a half while I scheduled the inspections, and I abruptly canceled because it wasn't in the condition that he said. And I made a judgment call that, hey, I've got this new gig here at Renters Warehouse. They've got me very busy. I'm having a great time. I don't have time to supervise contractors to renovate properties. I don't have time to, if I put money into these properties, which I'm okay to do because it'll be worth it, but then I have to release them. That means I got to kick people out of the houses and bump the rent up high. I don't want to do that either. So I made the judgment that even though these were the 2 highest yielding, best return on investment properties that I'm probably going to look at as I execute on this thesis, I'm passing on both of them because I have to be self-aware enough to know that I can't put the time in that's necessary, which means I'm going to take my eye off the ball, which means I'm probably going to make mistakes, and I'm probably not going to realize on paper, I'm getting these houses cheap. On paper, I can renovate them and they'll be worth substantially more. On paper, I'm going to make a high yield because the properties are inexpensive. But in reality, I have a feeling that I'm going to blow it on this one because I can't put the attention to detail. And I want everyone to hear that I'm giving up ROI for sanity for myself, meaning I know that I can't do what it takes to extract the value out of this investment, so I'm passing. And I'm going to wind up finding things that are already renovated in perfect condition. I'm going to spend $25,000 more per house. Yeah. These are $100,000 houses. I'm going to wind up buying a $120,000, $130,000 house in that neighborhood that somebody else already extracted the value out of by virtue of buying a beat-up house and fixing it up. I'm going to pick it up for the next leg of the relay race and I'm going to be happy to pay for that so that I don't have to do the work. So it just goes to, being cognizant of what you're actually capable of, and don't fall into the idea that everything is flipping, because the vast majority of it for people, if you have a full-time job, you probably shouldn't be a flipper.
100%. I think it's a complete waste of time if you have a full-time job. Your income is your number one greatest wealth generator, right? It's what you do with the income that matters. And for a lot of folks, let's say you're a pilot for Delta, or you're a pilot for Southwest, or you're a physician, you don't have the time, right? Like, you're healing patients, you're flying an airplane, and now you're going to add on the stress of running down contractors and finding what's going on and what's not going on. That doesn't make a whole lot of sense.
And that excites you as your side hustle, doing one at a time. Sounds great. But again, I hear people who are like, I'm in on 3 deals right now. Like, just having 2 in contract at once meant I spent half my day yesterday in inspections, running out to the car to do conference calls for my job. It was like very clear that I was in the process of making a mistake. And so I ate $1,000 in inspection fees that I ended up basically the inspection. I already decided to cancel the deals by the time I got in there with the inspector. So my big takeaway, and I should have known this being in the business, is that I should have required, as soon as I sign contracts, that I'm able to get in there and see these properties before I have an inspector in tow that I'm paying to be there. I made the mistake of believing that the seller, who again is a nice guy, but when he said it's freshly painted, and when I walked in, I said, what do you mean freshly painted? He goes, well, it was when I was in here last. It's like, well, when was that? Oh, that was 2 years ago. So you use fresh in quotations. You didn't put them in quotations in the listing on Zillow. So
right.
Anyway, don't be afraid to back out of something if you got yourself into it and you realize along the way during your due diligence that you're in the process of making a mistake. Get out of there and live to fight another day.
And yeah, it might cost you $1,000 like it did you, but at least it's going to cost you $1,000 one time now, instead of reliving that mistake month after month after month after month.
Yep.
Right. It doesn't make any sense.
It highlights the idea that there's a big benefit to buying a house that's already a rental. You know what the rental rate is, you know what the yield is going to be, but it makes it more complicated to get in and buy the property. So be aware that when you buy a vacant house, you can see all of them, you can walk through them like anything else. You're going to wait. You're going to think it's going to rent for $1,000 a month, and you might be wrong. So you take a risk on the rent. So make sure you know what the rental market is and get good advice on that. And you're probably going to wait a month before you start collecting rent because it'll take that long to get the place leased out. But it's totally transparent on the way in. So these are all trade-offs, and nothing substitutes for A, experience, and B, doing the due diligence, getting there, being on the grounds, and seeing it with your own 2 eyes.
And that's the most important part. It doesn't matter if you're an investor from California, if you're an investor from Dallas and you're looking at Indiana as a potential market. It doesn't matter. You need your own boots on ground because somebody else can say one thing in quotations. The question is, do they really mean it, or are they doing air quotes on the phone and you can't see them, right? It goes right back to, are you going to buy a car without test driving it, without seeing it, without jumping into it, without smelling the interior? And if you are, then that's going to be a little bit of a risk on your part.